everyone, my name is Adebukola Salami and welcome to Talk FINOMY with me, a podcast where we have conversations about finance, business, economy and the markets. So every month we actually break down major stories, trends shaping the economy. So joining me on this episode is Gideon Akinyoye. He's actually a research intern at Main Street Capital where he analyzes economic trends, financial markets and developments shaping the broader economy. Gideon, thank you so much for joining me today and welcome to Talk FINOMY with me.
Thank you, Adebukola, for having me. It's a great pleasure to be here.
So we've got quite a number of interesting news to discuss for the month of July, from developments in the Nigerian stock market to the energy sector, to inflation trend and to MPR. So let's kick things off with the equity market. So it's been quite an interesting month for investors. At the start of July, we saw that the market was still feeling the effect of a difficult June, where the NGS actually recorded its largest monthly decline on record from their market capitalization. Then just 2 weeks into July, we also saw a sharp decline of about 1.32 trillion naira in a single trading section, largely due to profit taking across banking, industry and customer sector. But what's interesting about this pullback is the fact that Nigerian market still ranked as Africa's second best performing stock market in the first half of 2026, delivering a remarkable 47.43 year-to-date return. So Gideon, so when people hear these figures, is it like money actually disappeared, and where exactly is profit taken?
Okay, thank you, Adebukola. So I think it is important to make this known to people that when we hear that market lost a particular amount, it does not mean that that physically money has left the economy, or probably investors have sent money to another account or something. So what it means is in terms of paper. And when I say in terms of paper, what this means is that the market value of companies listed on the Nigerian Stock Exchange has reduced. And when we say market cap, what market cap is that the total number of shares of all companies listed multiplied by what their share price is at that time. So when people hear that, oh, the market lost this amount, they need to know that it is not that the market lost it physically, but in terms of paper, in terms of their value. So now, what causes this most times, and just as you've mentioned, profit taking. So when we hear profit taking, in simple terms, what it means is that investors are basically cashing out their gains. Yeah. So for example, now for an investor that bought a banking stock at say 30 naira, and the investor held it till the stock reached 8 naira. So the investor would think it's wise to sell part of his holding. Now let's look at it. Thousands of investors doing the same thing. When thousands of investors begin to do that, we'll see that there's selling pressure in the market. And for the profit taking that happened in July 14, we'll see that is an LD one. It's just the market correcting itself.
So you mentioned market correction. So looking at July, would you say the market has started to stabilize, or investors are still being cautious?
I would say that market has begun to show a signal of stabilization, and we'll see that investors are actually still being cautious. And what makes them more cautious now is that investors are now looking at stocks with strong fundamentals, because right before H1 earnings season, we'll see that market has been pricing based on expectation on economic reforms, expectation on earnings report and all of that. But right now, investors are beginning to tilt towards stocks with strong fundamentals.
So you mentioned the H1 earnings, that's the half-year earnings, and we'll be seeing some companies publish their half-year report and all. So how important is the half-year report in determining like the direction of the market for the next few months?
Okay, the H1 earnings report is very important. Now that companies and institutions are beginning to churn out their H1 report, is going to help give investors a direction towards companies that they can invest in. They are going to check out for companies with good fundamentals, that is companies that have good profitability, companies that are liquid, and companies that their valuation now matches what their financials is showing now.
I think we can just conclude the fact that July is not really a story of gain versus loss. Basically, it's a story of resilience. And despite this volatility in the stock market, we can see that investors are still interested in buying shares and all. So I feel like the big question now is whether this H1 earnings will continue to sustain the momentum into the second half of the year. So now let's shift our focus from the equity market to the fixed income market, where treasury bills and government bonds continue to attract strong investors across July. So July was another busy month for the market. It began with the central bank announcing plans to auction 5.8 trillion naira worth of treasury bill in third quarter, which was actually the largest issuance of the year. And this was also followed by an overwhelming investors demand. We can see that at the first major auction of the month, investors submitted 1.86 trillion naira in bids for the 364-day treasury bill, which was more than 3 times the 500 billion naira that was actually offered by the central bank, pushing the stop rate to 17.70. So we hear a lot about treasury bills, CBN auction, but for somebody who is new to investing, what exactly is treasury bill? How do they work? And why is it considered one of the safest investment options?
So basically, treasury bills are short-term instruments that are being issued by Central Bank of Nigeria on behalf of the federal government. They have maturity days of 91 days, 182 days, and 364 days in order to help federal government to finance their short-term borrowings or short-term projects. Treasury bills are being issued at discount. So now let's take for example now, a treasury bill of 100 naira face value can be issued at 91 naira. That's at discount. So at maturity, what the person is going to get is the face value, and the difference is the person's return.
We saw that the CBN announced to issue around 5.8 trillion naira worth of treasury bill. What was the rationale behind this significant issuance? What was the CBN trying to achieve with this issuance?
So what the CBN was trying to achieve is two major things. The first thing is that they were trying to help the federal government to raise money, right, to finance their short-term projects. And another thing in terms of the monetary policy perspective is liquidity management. Now, most times when central bank do T-bills auction, what they want to do is most times to control liquidity. And when we say liquidity, that is to control the amount of money, amount of cash that is in circulation. When they carry out auction, commercial banks are going to put in the cash that is with them. They are going to give it to the central bank, and by doing that, the central banks reduce the amount of money in circulation. And when they do that also, it also helps to curb inflation, because when there is excess cash in circulation, it can fuel inflation.
Okay, so another interesting thing about the treasury bill was the fact that we saw that the stop rate was at 17.7%, and we got a report that inflation rate actually reduced to 15.91%. So why is this such a significant milestone for like investors who bought treasury bills?
I would say that, like I said before, the fixed income space now is beginning to look attractive for investors. Now that the inflation headline is around 15.91 and the stop rate is around 17.1, we can see that investors are earning real returns, right? That means that the interest they are earning is higher than the inflation rate. So it's an exciting one for the fixed income space at the moment.
All right, thank you. So I think what I can get is treasury bill basically it provides stability.
Yes.
It provides predictable income, and the best thing about the treasury bill is when your return is actually greater than the inflation rate, you tend to get positive return. For somebody looking to like build wealth in this current environment, how should they think about like balancing their investment between equity and the fixed income securities?
Thank you. I like the fact that you mentioned balancing, because right now what investors are doing is that they are not just holding on to one type of asset. They are not doing what we call diversification. They are spreading their assets. So they are investing in the equity space and also investing in the fixed income space. Yeah, so for investors that are looking for long-term growth, they should invest more in the equity space. And for preservation of capital, the fixed income space is better. Determining the balance depends on the individual, depends on the investor. It depends on three things. It depends on one's financial goal, whether you are trying to preserve capital or you are trying to accumulate more wealth. And also it depends on the time horizon. For a young investor should do more of equity, while for an older investor that is already approaching retirement should do more of fixed income in order to preserve their capital.
I think it also depends on your risk tolerance,
Exactly.
to how much of risk you can actually take it. So I think if there was one thing defining about fixed income market for this month. I would say it's confidence, basically. Looking at the oversubscription from people to the CBN announcement for third quarter, it just shows that investors continue to show strong appetite for government security. All right, so now let's turn our attention to the domestic market where we talk about inflation and the monetary policy rate. So let's start with inflation. So we got a report that the headline inflation actually reduced to 15.91% in June from 15.93% in May. And this picture look more complicated than it is on the surface because we got reports that 19 states and the FCT actually recorded inflation rates above 30%. So before we go into the inflation figures, what exactly is inflation and how is it measured and why is it one of the biggest economic indicators that we should pay attention to?
Inflation basically is the rise in the price of goods and services. To make it more simple, what your money can buy in, like, say 2 months backward is more than what it can buy now. And that means that when inflation is high, it affects our purchasing power, right? So inflation is a good economic indicator that everyone needs to pay attention to.
So I think one thing to clarify is the fact that lower inflation doesn't actually mean that prices are falling. It just means that the rate at which prices is increasing has basically reduced. It's increasing at a slower rate. So now that, okay, we saw that the headline inflation fell and all, Nigerians are still experiencing pressure, especially with food prices. So can you explain like that relationship?
So it is important to know that it is the headline inflation that reduced from what it was in May. But the food inflation, which affects me as an individual, which affects everyone, is not reducing. That is why Nigerians are still experiencing high in what they are incurring on getting food and all of that.
So with inflation showing early signs of moderation, all eyes were on central bank. We were really interested in what the central bank was going to do concerning the monetary policy rate. Then we got the reports that the CBN actually maintained what I would call a restrictive approach, where it held the monetary policy rate at 26.50%. So let's start with the basics. What's monetary policy rate? Why is it important in controlling inflation in the economy?
Monetary policy rate is the benchmark interest rates for all rates. It has impact on individuals, it has impact on businesses. For businesses, it determines what their borrowing is going to look like. When we see that monetary policy rate is increasing, how it's going to affect businesses that the cost at which they are going to borrow money from banks will also be increasing. But it's going to also favor those who are saving and those who are investing, because when there is an high in monetary policy rates, borrowers are going to be the ones to suffer for it, while investors and those that save are going to benefit from it. So the most important thing is to maintain a balance. So what the central bank is trying to say at the moment is that, we saw that the rate at which inflation is increasing is reducing, right? But we still need more evidence to know that, inflation, another global development, is not going to affect us. So what the central bank is doing at the moment is playing safe, right? They just need more evidence to know that, should we ease now? Should we reduce the interest rate now? Yes.
I think basically we can say the central bank decision reflects a balancing act. They are trying to protect price stability while still keeping an eye on economic growth, basically. So I feel like the message is clear. Inflation might be cooling down, it might reduce, but what the central bank wants to do is they want to see a lot of evidence, much more evidence, before they either choose to like increase or reduce the interest rate. So as we move forward, all likes to be on the inflation trend and whether the economy is actually ready for a shift in the monetary policy. So thank you so much for that, Gideon. So welcome to our game segment. So this game segment is termed Finance A to Z Challenge. I have 26 alphabets here placed inside this bowl. So what you do is you pick the letters randomly, and once you pick the letter, you have to give us a finance related word that starts with the letter. So the challenge is simple. You just have 1 minute on the clock. So we want to see how many finance terms you can actually get through. So there's no need to explain, no definition. It's just pick at random. So are you ready?
I am.
Your time starts now.
Inflation rates. I. X.
You can skip.
H. Hyperinflation. U. Unemployment rates. N. Not yet. J. D. Bull market. Bullish. M. Monetary rates. O. OPEX. B. Pass.
24 minutes, 24
E.
seconds more.
R. Skip. A. Assets. C. Time.
Time. In finance, time. How is that? Okay, we'll give it. We'll give it. Oh, your time is up. Your time is up. Okay, so Gideon, you did 8 out of 26 alphabets, which is what will we give you? We'll give you a fail or a pass. So I think I want to try the challenge. So I have my timer here. Am I ready? Yes, I'm ready. J, junk bond. L, lending. X, skip. M, money. Oh, Jesus. B, bonds. High inflation. D, development. I don't know. Y, yield. U, unemployment. H, hyperinflation. Sorry, I got that from you. E, I don't know. C, C. Cost. A, assets. Okay, there's nothing here. T, time. Just like you said, time. R, risk. K, I don't know. Z, zero bond. O, I don't know. P, I don't know too. S. I'm tapping myself. So I hope you enjoyed the game and actually did well than you. So the finance has its own language, and the more we are more familiar with these things, the easier it is to understand the market, the economy, and personal finance. As we wrap up today's conversation, one thing is actually clear. The Nigerian economy is constantly evolving, and every market movement tells a big story, from the equity market showing resilience to the treasury bill showing confidence, and even to the inflation rate and the monetary policy rate. It shows that finance, economy, the market, and business is something we cannot do without. And understanding these concepts basically helps us to make better financial decisions. So thank you so much, Gideon, for joining us today and from sharing your insights. And to everyone listening, remember that finance is not just about number; it's about understanding the stories behind it and how they shape our lives. So this has been Talk FINOMY with B. Until the next time, keep learning, keep questioning, and keep understanding finance. I'm your host, Adebukola Salami. See you next month. Bye.